Hello traders, Nick Shaheen here looking at the beast, Amazon. 11:27. Before I forget, at the end there'll be a little subscribe button to the channel. The YouTube channel is free to it. Also below in the description there's a link to a free pass to the chat room. Pretty cool place, a lot of great ideas, a bunch of good people, no jerks in there. So back to the topic, Amazon. I was listening to the CNBC experts and I took issue to what they said about Amazon. They said some good things, but a lot of junk in there. Like they said that they are in a spending mode, which they did say. That is correct. And they said that's why I can't touch it, one of them. Like that is why you should touch it, because anytime they spend, they make money on the back end. And then they said, which was the moronic thing that they said actually, that AWS is losing ground and all the others, they named them, are catching up. Okay, let's rewind or flip this. AWS didn't even exist a few years ago. And now it's the dominant force that every other idiot that hasn't figured it out before them now is trying to get a piece of the pie. So by the time they catch up, Amazon would be at a different cash cow altogether. That's what they do. They find new branches to feed the beast. And what does that mean? I even had a discussion one time and somebody told me its growth days are over. I just about fell out of my chair. Let's visit the facts. This is Amazon's Yahoo income report, income statement. So I didn't make this up. You can look it up yourself. In 2015, top line of 107 billion. Now it's 232. So I'm no math wizard, but that's a lot more. I doubt there are too many companies that can say that, especially mega caps, top 5 companies on the planet. Not many can say that. Number 2, net income, right here, from $500 million to 11 and change, and the year is not over. Okay, so don't know what moron it was that told me that, but I'm calling you out, moron. Anyway, so from a valuation perspective, 80 PE, oh my gosh, extravagant, not so fast. So this is the growth company, and I don't look at growth company from a PE perspective, because they're supposed to spend in order to grow, meaning the E doesn't matter as much as the sales. 3.8 times sales. That's cheaper than Apple. Facebook is 8 or 9, maybe 10 times sales. Okay, so pot companies are 50 to 200 times sales. General statement. Beyond Meat is 55 times sales. Those are expensive. This is not expensive. When it stops growing, then you say, where's your PE, low PE? Because Facebook and Google, for example, are in the 30s, maybe 28. Apple used to be in the 18s. Now it's expensive. It's like, I haven't looked at Apple in a while. Maybe 20, I'm going to guess 23. Especially today, it spiked. 22. So Apple has gotten a little expensive for 4.5 times sales. For itself, usually it runs a lot lower than that. Not saying it's expensive that you need to short it. So back to Amazon. So is this a good time to buy Amazon? If I'm looking to buy Amazon for the long term, yes. In my opinion, if I buy it here, I'm going to make money in 5 years. If I'm looking to trade it, then I need to determine how long of a trade it is, and I need to find out how to do it and find the lines that matter. So for a medium-term swing trade, a daily chart is okay. Like right here, it looks like it peaked out above this fail, and it looks like on Monday, what is it today, Wednesday? On Friday when we open after Thanksgiving and Monday, if they can maintain this, they will overshoot. Their next battle will be here. So if I'm looking to enter for a faster trade, then I have to get it more granular and go into a lower time frame and maybe put an alert up here. In fact, I'm going to do it right now. So if I missed it and I want to get into Amazon, I'll say, wake me up when they get there so I can start looking at it. Okay, just one way of doing things. Another way of doing things is I shared recently a trade to go along Amazon via credit put spread or sold puts. And this red box probably denoted exactly where it was because I had that represented on the chart. That's a winning strategy, by the way. It paid quickly. And somebody that wanted to balance it out, they could have sold call spreads on top to make an iron condor. And I can't remember the time frame. I have to look it up, but probably middle of December. So that's another way of trading it. But overall, I'm going to take all those lines out and go to a 5-year. So Amazon has a habit of winning. That's .com on. Okay, so it has a habit of winning. Who am I to judge it? So if I were to draw a box around a consolidation period, what about this one right here? I forgot all the... Okay, let's take them out. I'll do it this way. So if we have a consolidation point right here, we had an emphatic rejection here. These are weeklies. Okay, so that week they tried to sell it hard. Confirm, confirm. So onus is on the bears to say, you know what, we can do it. I know we failed so many times, we can do it. This is not a coincidence. This is not a coincidence. It's been a contentious level. If you believe in Fibonacci, that's about halfway, right? And so we have a tight cluster. These are a lot of weeks. A breach of either side will carry up or carry down. So I can put an alert on the lower side, an alert on the upper side. If I'm looking for the super long term, I'm looking at this period of time right here. It doesn't have a lot of flat areas. So this is another one where they had a poke and they failed and they failed and they failed and then boom, okay? So they had a poke. Let's call this X because it's easy to draw an X, right? And they failed, then they failed. And then they had a consolidation zone right here, very similar to this one right there, within which they failed two or three times, within which they failed 2 or 3 times. And now they're back at it. So let's say they get out of this zone, this R, it's proven R. I'm not arguing with that, just like this is proven support. A breach of either side will have momentum in that direction. So if they go through it and it's not a hard line in the sand, there are many little hard lines, but the whole area is resistive, then they're going to blow through it. The more bears that there are now in it, the bigger the rally, because then buying begets buying trying to cover. So this is how things happen usually. Let's see if we can get some Fibonacci. Today I use pitchforks. I don't use pitchforks often. Okay, so I was trying to see, this zone right here is the 50% retracement of this correction. What does that mean? This correction, half of it is this exactly. So anytime there's a rally or a drop, they say that they often come back to half of it thereafter. So they fell this much, they recovered half, and they tripped, and then they blew through it. And when they come back to it, it's a pivotal zone. They already fought over it so much here. They're going to fight over it so much again, and on and on and on. Okay, back to the daily chart to see how we can get some information from the volume. So one thing that they never talk about on CNBC, for example, is the volume profile, which is like the most important thing on the chart, in my opinion. So they bring Carter Worth, who's a really good technician, according to them. They call him master or whatever, chartist. And he says, he draws the lines and he connects the dots with the, it's cool. But tell me about levels that matter. He draws and he interprets. Well, how can he interpret without knowing where the market actually is? What does that mean? Take time out of it. So what does that mean? So these volume bars down here, they're time dependent. So I know that on this report, there was this much volume. On this report, there was this much volume. On this report was a lot of volume. And you can see there's a lot of volume here on this day. So how does that translate into levels? How can this help me? Well, in comes the volume profile. Take time out of it. So all these bars down here, they're in these bars right here on the left. So this gives me a whole bunch of information that a chart from Carter Worth would not have told me on TV, because it tells me that this orange line right here is the busiest place for trading. This is where buyers and sellers did most of the action. This is a fact. For a year, this point, this level, 1775, 76, whatever it is, 1780 for good round numbers, was fought over the most, 1778. Okay, so if I'm coming up to it, it should be a break. If I'm falling into it, it should be support. So that's not a strange coincidence that they're teetering around it, because they can't make up their mind. It's like a magnet. You can't run away from it too much. You can't fall through it too much without good reason. Now, a breach of the resistance here will bring buyers. So then it looks like a cup and handle-ish. That's a funky. And it draws a line down here. That's why I'm more convinced that this box is pretty dang important for, here we go again with these lines I forget, for Amazon, because this is an emphatic rejection many times over, but this candle right here is very significant. And then this failure is really significant. This is okay. It's like a easy come, easy go type of a deal. But when you break through a range, a prior failure point, you tend to go carry through it, because it's kind of like they fight, and they, okay, come in. And they go overshoot. So same here. So if I'm long, I stay long. If I'm looking to get long, I could get long here or put a trigger just above here. Depends on my time frame. So the point of this video is Amazon as a company is a winner. It deserves benefit of the doubt. So to bet on it just because they're spending a little more money here is wrong, in my opinion. Over time, they prove to us time and again that they know what they're doing. They have a good execution team. They will find new cash cows and will get it done. And if not, they'll shut it down. And the fact that they have Alexa now, that they're going to be licensing to everybody, I think that's just bonus to the bottom line. So I don't short it just based on what I hear on TV. Shorting it has been a losing proposition. It's just picking the time to be long it for as long as they can prove to us that they're still the same team they have been for the last, 12 years, 13 years. All right, that's it. This is longer than I wanted, but I think it was important. We can segue into a Tesla discussion here, but I think I'll do a different video for Tesla alone.